Ladies and gentlemen, good day and welcome to Vardhman Steels Limited Q3 and 9 months FY24 earnings call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vatsal from Choice Equity Broking Private Limited. Please go ahead, sir.
Thank you, Tushar. Good morning, everyone. On behalf of Choice Equity Broking, welcome to the Q3 and 9 months FY24 post-results conference call of Vardhman Steels Limited. I also take this opportunity to welcome the senior management team. On today's call, we have with us Mr. Rajendra Kumar Riwari, Executive Director, Ms. Soumya Jain, Executive Director, Mr. Sanjeev Singla, CFO. Kindly refer to the safe harbor statement on the second slide of the earnings presentation. I will now invite the management for the opening remarks to be followed by Q&A session. Thank you and over to you, sir.
Yes, thank you. Good morning, everyone, and thank you for joining us on our earning calls for the quarter and 9 months ended 31st December 2023. On call with me is Ms. Soumya Jain, who is our Executive Director and daughter of Mr. Sachit Jain, Mr. Sanjeev Singla, our CFO, Mrs. Sonam Dhingra, our Company Secretary and Compliance Officer. And we regret to inform you that Mr. Sachit Jain, because of some business engagements, will not be able to join this call. And we will answer all your questions. Thank you. Now, the quarter which has and 9 months which has gone by, overall quarter went very well in terms of operation. During this quarter, we had 2 shutdowns. One 5-day shutdown for our furnace, that means from the steel melting shop, and 13 days shutdown in the rolling mill. The purpose of taking this shutdown in the rolling mill was to add 2 additional stands, which are the equipments for rolling. And with the installation of these 2 stands, we will be able to increase our rolling production by about 10,000 tons per annum. So it was a first step for our revamping activities on our rolling mill to increase our production. In the second phase, we will be putting up another bigger reheating furnace and cox mill. Those will take another 12 to 18 months to come forward. All these 3 activities are for the revamping of rolling mill, taking our production to the next level, and also giving the quality assured rolled bars to the market. So this was about the production activity. As Sachit sir has informed investors number of times that we are increasing our capacity to 260,000 tons per annum of our steel making. So in order to achieve that, we have already undertaken some initiative. Rather, I will say we have executed some initiatives during the month of January, and the progress is quite good. And hopefully, we will be, from next year onwards, we will be achieving the higher target of SMS production. The other important thing for you to note is on our ESG initiatives. In our earlier communication, everywhere we have said that our carbon footprint is 0.82 metric ton per ton of steel, emission of carbon dioxide while we make steel. It has come down to another low level of 0.68 because government has changed some standard of calculating the footprints. So this is I would say from the ESG point of view, it's a good development. As we informed in our board meeting also, we have executed power purchase agreement of solar power plant on 16 December 23. Ongoing capacity expansion, which we envisaged by adding the new equipments, is going on as per plan. And as we targeted about 800 tons per month, we have already achieved around 700 tons per month, and in the subsequent month, it will further stabilize. Our collaboration with the IT team is going on well. All activities are their participation and our understanding about the product quality, safety, etc. is going on as per our schedule. Their engineers, their experts are here with us. Everything is going on as per our plan. As I said earlier, the quarter 3, it went well as per our budgeted plan, but however, quarter 3 is always little bit subdued because of various shutdowns being taken by the automobile manufacturers and forging plants. So therefore, we had lost some tonnage in the sales, about 6%. I think our sale was less, but we are hopeful that in the times to come, we will cover up that, and we will be able to achieve our annual target of around 200,000 tons. So this is all about general. Overall scenario is looking good. Car sales, everybody knows, is upbeat. Manufacturers are upbeat. It looks good. So now I request Mr. Singla to go through the financial format with you. Thank you.
Thank you, sir. In terms of financial performance for the quarter 3, it is almost in terms of tonnage and in terms of revenue, same as was in Q3 of the corresponding quarter of last year. Actual tonnage we have achieved is 46,400, which is 0.17% marginally higher than the Q3 of last year. And revenue from operations is almost same as in the Q3 last year. In terms of EBITDA, though on the face it is appearing to be lower, but I would like to say that this Q3 of last year was not comparable because of two reasons. One was that we have accounted 6.6 crores of GST refund in Q3 last year, which was pertaining to Q1 and Q2. And secondly, the price reduction of 1,700 rupees, which was pertaining to Q3, was decided in Q4, and accordingly the price decrease was also factored in Q4. So in last year we have said that Q3 and Q4 is to be considered in total, because Q3 some figures were booked in Q4. Overall EBITDA per ton in Q3 this year, it is 8,900, well within our stated range. And after all, our PAT for this quarter is 22 crores. And as far as Rewari sir has already said, that we are lagging a little behind in terms of our overall sales for the 9 months, and which we are trying our best to meet our annual target of 200,000 tons. So that's all on our financial performance. Now I request for the question answer session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Angad from Samiksha Capital. Please go ahead.
Good morning, sir. Thank you for the opportunity. Sir, my question was on the blended realization. Over the past 5-6 years, we have seen the blended realization has improved from 55,000 level to around 85,000 level. You had mentioned in FY24 this year will be a year of consolidation on volume front. Sir, so can you just give us some trajectory on the blended realization? How do we look at it? Is this current level sustainable? And can you just give us a perspective? Thank you.
Mr. Singla.
So current level, because of this 85,000 is basically decided by the market. Mostly it is driven by the raw material prices. And as you will see that in the past 2-3 years after COVID, the raw material prices increased to a level which one never expected. And this 85,000 figure was even more than 95,000 also. As of now, we see this revenue figures of 85,000 rupees is more or less stable from the last, I will say, 1 year. And going forward also, we don't see much change in these figures.
Okay. And one more question on the capacity levels. Since we'll hit the peak capacity in 26, until the greenfield capacity comes, what are our plans to incrementally increase our sales in volume front?
As we have already explained that we are by doing various improvements in our process flow, we are increasing our own capacity, which we said that will be 260,000 metric tons per annum, which can also, we have a scope to increase it further. We will do that. Our own rolling mill is also, we are increasing the capacity, and once we do the full revamp, then that capacity will also go up. So I think that way we will be able to meet the requirement of the market.
Okay. And sir, I just wanted to understand on the frequency of the negotiations on the price level with OEMs. Is it like quarterly or what's the frequency level? And how do we implement the new price? Is it decided from the first date? Can you just throw some light on that? Thank you.
Normally the price is quarter-wise, and we have to negotiate with the OEMs. So broadly, it is based on the raw material price and a few other. If we are selling alloy steel, then the price of nickel, moly, etc. But it has to happen quarterly. But sometimes there is always a lag between the finalization and the start of realization of that price. But to make it simple, it is based on the raw material prices. Raw material has few indices to note. It can be taken from various, steel mint and other sites where it is declared, like shredded, as well as the ingot price available in the Mandi Gobindgarh. So these are the influencing factors.
Okay. Thank you. I'll get back in queue.
Ladies and gentlemen, please press star and 1 to ask questions. The next question is from the line of Naman, an individual investor. Please go ahead.
Hi, good morning. A couple of questions. First is, if you are aware of, that there is a...
Can you speak loudly, please? Naman?
Yeah, sure. Okay.
Yeah.
Let me try a little louder. Okay, my question number 1 is, if you are aware that the plant is under maintenance or we are lagging behind targets, but there's additional thing, which we always hear that we are building up the capacities of plant. So what I mean to say is why we are not so proactive, in managing this, because that means we are aware of the situation that our margins or our sales or we are not meeting at the target. So why we not make up additional plants or capacities, or why we are only doing in a period where we are getting hit. And number two is every year we talk about IT and the future prospects there, but every year we see the figures of exports are very negligible, 3 to 5%. So these couple of things are not summing up, so that's the question on it. Or you can provide some detailed numbers or projections, how the capacity of the plant or the projections, will lead up to a good number, because that's what, everyone is expecting something to build up in near future. And when we are talking about new capacities of plants, I'm sure, I remember we talked earlier also something about NOCs and going up with the Ministry of Environment and, all the green signals from PSP, I'm sure management would have taken those considerations too, but just want to know how things are at the current status and what's the projection.
Yeah. Thank you very much, Naman. We appreciate your concerns. First of all, let me assure you that nothing is happening abruptly. Everything is well planned. As I explained, every shutdown is well planned, and we start building up our inventories to to feed the market, and we have not suffered any market share or any sales because of our planned shutdowns. Number two, I will emphasize that in order to bring in improvement in the existing steel plant, it is almost imperative to have shutdowns. Otherwise, it is a hot matter. We can do some projects offline, but many of these activities have to be undertaken while taking the shutdown. The shutdown of furnace of 5 days is almost as annual or once in 2 years' time when we have to overhaul the furnace. That is also in the interest of capacity, and it's a planned maintenance activity to avoid future breakdowns. So this was the first part of your question. Second part was exports. Exports are building up, and we are glad to inform you that in the last quarter also it is one of the highest exports we have did. About how much is the point?
10%.
About 10. It has now reached 10%, and in couple of years' time we want to reach to 25 to 30% of the total this thing. In a steel for automobile, there is a little longer system. We have to first make the steel, then send the bars for approval. After that, once that is approved, then the parts are forged and then sent for approval. So it is the lead time is in terms of couple of years, when we finally get approval. And to assure you that today we have approval from all major automobiles, right from Suzuki, Maruti, Toyota, and many other leading manufacturers we have in their approved list. Things will be moving are moving as per our plan. There is nothing to worry. We are not going back on anything. Everything is happening. About you said about Aichi, we are also started supplying to Aichi, and the Aichi way of doing business is that it will slowly build up. Maybe in the next year we will see the higher figures of export to Aichi also, and ultimately it will reach up to 30,000 tons of steel in couple of years time. 20 to 30,000 tons per annum, which will increase our export element. However, this export will not appear as an export because we have to give it to a trading partner of the Aichi, who will buy from us in India and then will export. So, Naman, be assured that everything is going on as per plan. We will try to do as a team to better that, but this is, I think, this is the normal way of progressing. I hope I have been able to answer your questions. If still any point, please let us know.
Yeah, that's great. Thanks. That's very helpful. And the last one, about the new, whatever we are talking about, new additional capacities or plants. I hope all is done as per the government approvals, NOCs, PSPCL or Ministry of Environment or anything.
Yes, we have, as per the Ministry of Environment clearance, everything is cleared. We have been able to fulfill all the conditions laid down by the Pollution Control Board. All action have been taken from our side, Lot of capex has also gone into that, but we are now fully complied up to 300,000 tons of billet production, steel melting shop production.
That sounds good. Congrats for that. So I think, yes, we are looking forward, I think, in the hopefully coming years, with export figures moving up, as you mentioned, and new IT partnership will really show some results. Thanks. That's it. Thank you. Goodbye.
Thank you.
Thank you. Participants who wish to ask questions may press star and 1. The next question is from the line of Chetan Parik, an individual investor. Please go ahead.
Hi, sir. Am I audible?
Hi, please. Yeah, please go ahead.
Yeah. So my first question is, so how do you look at the industry at this moment? And how is the demand for the auto industry at the same point?
At this moment, as I said, the last quarter was a little bit subdued because of the shutdowns. This quarter is looking normal. However, there is the news every day in the in the media that automobile sector is growing. So we hope that if it grows, it will also be boost to the steel makers for this segment. So it looks, I would say, normal to us.
Okay. Okay, sir. So, sir, my next question is, as you mentioned earlier, that we have started, mass production for IT steel. So, could you just throw a bit of light and update for the progress for the same?
Yeah. Last year in February, we have started the mass production, you are right. And as per our plan, this year we targeted that we will be doing exports to IG Forge in Southeast Asia, about 7,000 to 8,000 tons. So that is also in line, and accordingly we will do that much of exports in the current year. And going forward next year, our plans is that we will be doing about 13,000 to 15,000 tons of exports. So gradually it will increase. And as Revadi sir has earlier said also that our exports are also increasing. But this sales to this IG Forge in Southeast Asia is getting merged in our domestic sales because we are selling to their trading partner in India. So our exports, including this trading partner, will grow beyond 20% in the next 2 to 3 years.
Okay, sir. Last question I would like to ask, is there any new expansion plans? Like, if yes, then how are we going to fund the capex?
As of now, the capex which we have planned, like Cox Block or this reheating furnace, so all this announced capex will get completed by mid of next financial year. And as conveyed earlier also, so we will be funding this from our internal accruals only. Marginally, maybe we will have to go for some funding, but as of now, we don't have any such plans. So mostly it will be funded through internal accruals.
Okay.
And
Thank
for the new project, we have still to decide. Things are on the drawing board only.
Okay, sir. Thank you.
Thank you. And the next question is from the line of Radha. Please go ahead.
Was 5%. In this quarter, you said it's 10%. So could you give some insights on whether it was due to new customer wins or higher share of business with the existing customers, how it is?
Can you please repeat? Their voice was cut in between. You lost.
Oh, Yes, sir. Sir, I said that export in the last quarter, it was at 5%, and this quarter, if I heard it correctly, you mentioned that it's 10%. So could you please give us some insight as to whether it was due to new customer wins or increasing share of business from existing customers?
It was blend of that. There were new customers also and the existing customer also. So it is a blend of that. And I think, as I said earlier, that new business comes on the basis of approval. So we are getting some approvals. As the approvals come, then comes the demand. So it is blend, mostly from both new customers also and the existing ones also.
Sir, 2 quarters back, Mr. Jain has mentioned that we are yet to receive approvals from Yamaha and Musashi as our customers in the exports market. So does this quarter have we seen sales as a result of approvals that we have received from them?
No, not. They are all approvals are in progress, but we have still not received any approval and any sales demand accordingly. It will take maybe a quarter more to. Yeah, there's a sufficient progress in this matter.
So in terms of geographies, we are exporting to Thailand and Saudi. Anywhere else am I missing other than these regions?
I think at this moment our major export is in Thailand only, because Thailand has it is a forging hub, so that that is our first target. Plus our partners Aichi has their major forging plant in Thailand, Indonesia, so in this region only. However, now we are making efforts and exploring the markets of Europe also. But at this moment, we are concentrated in Thailand, because Thailand is offering us the opportunity to grow.
Okay. So lastly, you mentioned that some new projects are on the drawing board. So would that be in the specialty steel itself or anything else you're looking for?
At the moment, our vision is focused towards automobile segment only. However, while we travel ahead, whatever opportunity comes in our way shall be evaluated, and accordingly sufficient required steps will be taken in that segment. But at this moment, we are automobile-centric manufacturer.
Okay. Thanks and all the best.
Thank you. And the next question is from the line of Angad from Samiksha Capital. Please go ahead.
Thank you for the opportunity again. Sir, 2 small bookkeeping questions. Sir, what is our electric and non-electric volume mix for this quarter and also for the 9 months FY24? And if you could just give us the vehicle category figures as well, like the passenger vehicle, commercial and two-wheeler split, that will be helpful.
Angad, as discussed in our earlier various meetings also, our overall, in case you will ask me the share, our overall share, about 40% goes into the passenger vehicles, and about 32 to 34% is in the two-wheelers, and rest is to the commercial vehicle and the various other types of vehicles, and some share is also going to tier ones, for which we are not aware about where they are supplying. So those tier ones are having the approvals from their own OEMs. So it is a broad, I will say, bifurcation of our revenue, that mostly it is to the passenger vehicle and the two-wheelers.
When you asked about the electrical and non-electrical, our electrical supply to EV should be around 5% or 6% of the total sales, And at this moment, we are only 5 to 6% of our level only.
That is helpful, sir. And sir, one small question. In the other income for this year, So how do we look forward in terms of the other income, since it includes the GST refunds, electricity incentives?